Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 7th of February 2019, and we're commenting on the Bank of England's decision not to raise interest rates. Like the Fed 2 weeks ago, the Bank of England's Monetary Policy Committee has decided not to raise interest rates today, but to maintain them at 0.75%. The bank is forecasting growth for the UK for 2019 to stand at 1.2%, lower than its previous forecast of 1.7% made in November, and would be the slowest growth rate since 2009. It's also revised growth rates down for 2020 from 1.7% to 1.5%. The bank said it had seen further evidence that businesses were being cautious in the run-up to Brexit and evidenced a decline in business investment and house building, as well as a halving of the growth rate in exports. The bank's quarterly inflation report cited that, quote, the UK was also being hit by slower than expected growth in the eurozone and China. Growth appears to have slowed at the end of 2018 and is expected to remain subdued in the near term, unquote. What makes matters worse is that the bank has also forecast that there is a 1 in 4 chance of the economy slipping into recession in the second half of this year. It cites that, quote, there has been an intensification of Brexit uncertainties, unquote. And its survey of 208 firms indicate that half of those companies have put plans in place for a hard Brexit outcome. Despite this, the bank has also stated that it still believes, quote, an ongoing tightening of monetary policy over the forecast period at a gradual pace and to a limited extent would be appropriate, unquote. The last rate rise in the UK was August 2018, but many economists are predicting that rates may again go up when uncertainties over Brexit have dissipated. This clearly flies in the face of the bank stating that there is a chance of recession later this year, which is why one would be forgiven for being confused by a research report written by Capital Economics, which states, quote, Brexit is a political crisis, not an economic one, unquote. Similarly to the US, jobs data, however, is positive, with an unemployment rate of 4%, the lowest level for 40 years. And there has been a rise in wage growth, and the bank is forecasting a further decline in unemployment this year. So we are receiving mixed messages. On the one hand, there is poorer economic data and a fear of a recession, but on the other, lowering unemployment and rising wage levels. Whether this is just a ruse to push politicians not to vote for a hard Brexit option, as it could be dangerous to the economy, we shall have to wait and see. Perhaps one answer is that the forecast for CPI inflation in 2 years' time was nudged down from 2.12% to 2.07%. The bank's inflation forecasts are based on the market's expectation that rates will have been increased by just 0.25% by the end of 2020. This implies that perhaps 2 0.25% hikes would be required to hit the inflation target of 2%. Which would be fewer than the bank implied in November. So, we have a situation whereby the bank has predicted lower growth, but sterling has remained slightly resilient despite an initial fall. And part of this is that currently economists, traders believe that the Central Bank of the United Kingdom has still enabled and maintained the prospect of higher interest rates later in the decade, Perhaps not for 2019, but certainly for 2020. Or maybe one potential rise later this year, which, if its fear of a 1 in 4 chance of a recession results, then of course no such rise would take place. What is your opinion? Please share it. It would be most appreciated. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.